What's going on, guys? I actually just want to give you some updates regarding the Bitcoin chart today. Alright, so a lot has happened, uh, really in regards to developments and overall support resistance levels. It's been pretty stagnant in regards to price, but in terms of overall understanding of just support and resistances, there's been a couple of change ups. So now, I don't think I've really said this yet um, to anyone who's been watching previous videos, but I admire horizontal resistances better than diagonal. Just straight up. They're more reliable, especially if you find the horizontals off of like a weekly candle close, top or bottom, or like a daily candle close, or a 3-day candle close, stuff like that, even like as low as to the 1 hour, 4 hour. Hence how I got these like vertical horizontal red boxes here. Um, Now, in regards to diagonal, triangles do actually favor better in terms of overall percentages. Now, obviously, like I've said in the past, weekend trading is completely risky. Um, Very easy for a couple of whales to just like mess with the price and just completely mess with the entire structure of patterns. So, um, where I left off last time was this was the main line of resistance. This wasn't even here. Um, this price action right here was not even visible at the time. So that was kind of where we left off. So as it stands from yesterday, the horizontal box from 21.9 all the way down to 21.689, that has still been holding strong in regards to overall resistance. Now, I don't trade on the weekends, but I do like to practice and I do like to train. So I did a pseudo short entry, which is at that purple line at 21.689. Why did I do that? Well, because if I go to um, these particular indicators here, these are my scalping indicators, the TSI and the market cipher indicator, um, because it just covers momentum like swimmingly. Also, the exponential moving averages do a really good job of figuring out overall trend. So why did I open up a quote-unquote pseudo short? Well, I'm going to go to the daily chart real quick. I'm going to move from the daily, go all the way down. So I noticed on the TMA, which is more so a fast moving average, it broke above the average blue line, which is the overall slow moving average, but it's looking to go from green to orange. Okay, so there is a retrace opportunity to be had here. Usually it also created a lower high, so that's kind of concerning. But really, at the end of the day, what I'm kind of wanting to see is maybe like a bounce, and if it's a lower high from previous, it's probably gonna come back down. But it could also do something where it could just like bounce and then cross. So there's still a lot to be seen on the daily chart at this time. But from current price action, keep in mind this is the daily TMA. It's looking like it wants to come down. So that's kind of one of the reasons why. Now, this is a slower moving average. This looks pretty good still, but you know, this is kind of like the zone where the Bears, I'm sorry, have really kind of stepped up their game. So in regards to previous past couple days in terms of short-term history, this is more so a zone where bears start to get more confidence and just open up shorts and all that kind of stuff, or people are selling for the weekend. Now, also the RSI on the daily is looking to curl down a bit, so it's trying to escape the bearish control zone, but that's yet to be determined if it will. Also, on the daily, we are getting our first yellow bar candle. Now, we still have, well, it's the daily, this latest daily candle just started. So we still have 23.4 hours, yeah, 23 hours and 44 minutes to really kind of see this develop, but I don't really like seeing this. And now, why I'm concerned here, and the TSI is saying as long as price is above 19.9, we're still going to go up, but that's a long way off right here. 19.9 is in this particular zone here. I'm just going to put 19.9, I'm just going to put it right here. That's, in this particular area. So if you're like scalping, or if you're like doing a swing, in order for that to even confirm, that's still a 6%, 7% dump. As a trader, like, that's not necessarily good if you're doing swing trading at this time. Not financial advice. I mean, do not trade on the weekends. I'll be completely honest with you. That's some really scary stuff, I'll be honest. Alright, so let's go to the 4 hour here. Now, more intraday type of stuff. So, what has happened? Now, on the 4 hour, I did discuss this yesterday, that the TMA did kind of signify a topping, and we did have kind of like a double top scenario play out here on the TMA. And so far, it is playing to how I would expect it to play. Also, we did get a cross on the TSI here, and it says here as long as price is below 21.7, it's heading down. RSI confirmed a cross below. Not only did it cross, but it tried to break back, but it's just been unable to even test the slow moving average. It's done consistent lower highs at this time. So that's not necessarily good if you are longing at this time. We did get a sell signal right here on the double MACD. Yeah, we're on this candle. And so far, yeah, it's playing out pretty decent. There's still a lot more to go because momentum is pointing to the downside. So I wouldn't necessarily expect any bounces at this time. I mean, we'll see how it goes. It is the weekend. There's a lot of weird stuff that happens, but in regards to slow moving averages, or slow moving averages, I would say quote unquote slow moving indicators, this isn't necessarily good. From a bullish perspective and a bearish perspective, I mean, this is what you want. Yeah, the bars are still red on the bottom here. Money flows still to the red. Momentum's heading to the downside. On the 4 hour, there was a buy signal a couple hours ago. Wait, let me see. From current price to a day, yeah, pretty much like a little over a day ago, almost 2 days ago, there was a sell signal. So that's still kind of like playing out. TSI got a cross, and it is still moving to the downside. Now, it hasn't crossed the zero line downward yet. When it crosses the zero line, that's when stuff really goes like intense to the downside. So it hasn't done that. So we're kind of just seeing the beginning. Now, what I've noticed, and you'll probably see here, the zero line has a lot of chop, right? A lot of opportunity for consolidations, fake outs, pumps, and dumps. But ultimately, usually, when it comes to this height here, it's not up here for very long. It's just not, you know. So we've kind of, in my opinion, have already seen like a topping event. So from my perspective, yes, the resistance line that I had drawn broke out and is currently testing it, which is kind of interesting. But I want to go through all these lines because I know it's kind of wonky and wild. Okay, so because this particular line here um, is broken, or I wouldn't say necessarily broken, but um, invalidated as true resistance, I'm gonna have to give it second onus to this particular line up here. Why is that? Because on the 1 hour, I like to do 1 hour candle closes because they're pretty accurate, I've come to realize, is because we still have 3 touch points. Well, multiple actually. We even have powerful wicks. It's more powerful when you just get a few wicks as opposed to candle closes. So, yeah, so we have 1 touch point, 2, 3, 4, 5, maybe even 6. So we do have some history of it being validated. So that's why I do kind of consider this more so now as a resistance, the main resistance line, as opposed to the dotted white line right here. Now, at this time, we only had 2 touch points, now 3. So I did mention the other day in the last video that this particular line right here, actually no, my apologies. This line was not here. It was this line. But let me go back here. Sorry about that. I'm backtracking. This particular line, I recently, just this afternoon, came across, and essentially we kind of have like a potential triangle here, a potential triangle pattern. So that's to be determined. Um, but from my perspective, uh, yeah, when this breaks, I'm going to be looking for this particular line. Now this line was actually here the last video. Okay, I know it's kind of wonky and complicated, but like bear with me here. So the reason why I had this particular yellow line as kind of like my line in the sand, and that's how I referred to it yesterday, was because this huge bullish engulfing candle. So the way that bullish engulfing candles work is that they are trend setters. Okay, so unless this particular candle gets invalidated, trend is to the upside. Now, what does it mean to invalidate a bullish or bearish engulfing candle? You have to have an hourly close. In this case, we're using the 1 hour chart. I have to see an hourly candle close below this line, which is at 21.249. Basically 21.2, I'm sorry, was it 21.25 roughly? I want to see this break. Once this breaks, I do expect a dump, a pretty big one at that. Now, I want to show you a trend in regards to the exponential moving averages. So I'm going to turn off everything just so you can just see. It can get a little confusing, I know. So I'm going to turn off everything except for the exponentials. There you go. Okay, so how I've been taught about exponential moving averages is when you see expansion, space between the exponential moving averages, that means the move is parabolic. So, you see expansion between these, that just means it's just intense. Okay, you don't want to go against the trend at that point in time. Even the 9 and the 20 had expanding space. But what's happening now is the exact opposite of that. Okay, we are seeing the 9 and the 21 EMA starting to curl across, kind of get wonky and not really be considered strong support validations. We're now seeing the horizontals take more onus as main support lines and resistance lines at this point. The EMAs are kind of losing it. So when I see tightening on the exponentials, where you see just like crazy tangling and all that kind of stuff, I see that as a trend weakening. And usually when trends weaken, there has to be an inflection point. Now, this triangle within this potential broadening descending wedge, I still think we are in a few scenarios here. We might have a bullish triangle, predominant bullish triangle, or we have a bearish triangle. So like a bearish triangle, I forget the name, it escapes me. It's the weekend here. Not gonna lie, I'm a little hungover. Um, when a triangle has a flat bottom, it is usually considered bearish. So, um, now we could have a larger reversal triangle on our hands right here. Now, um, at this time, this particular hourly candle is supporting this upward vertical. Okay, so we have a lot of touch points here. It's a little confusing, I know, but in all honesty, I can't consider this bullish until there is hourly candle closes above this particular line. I know it might look like I'm moving the goalpost or whatever, but to be honest, the reason I'm doing so is because it actually further validates this horizontal red box as more so as the line in the sand as opposed to this previous line of resistance. And there is still some history to it. There is, if you actually zoom in into the candles, there was like a battle between the bulls and the bears here. So there is some significance to this particular line because bulls and bears kind of did see it as like support resistance. So if you notice that there were multiple candle battles, even now like wicks to it. So in a way, it is somewhat of a heart line of some kind. There is some significance to it, but it's not as significant as like a pivot zone. Now, this red box right here has always been considered to me a pivot zone. Unless so for example, if we have multiple candles close right here at 21.249, um, and we see like a double bottom scenario, that would be kind of interesting to see. So this would be like a pivot to the upside, right? But right now we only have really one touch point, so to give it that tag is just not there yet. But so far, what I'm looking at here is actually the exponential moving averages because the 1 hour candles are getting really comfortable closing below the EMAs, the 9 and the 21. Now it is the weekend, so there's a lot of crazy shit that happens during the weekend in regards to price action, so it's not necessarily um, something. This is why I do not trade. I know I've said this like 20 times in this freaking video, but like I just want to like ingrain it in your heads. Like, do not trade. You can practice throughout the weekends, but do not trade during the weekends. This is you're gambling. You know, just go to Vegas or whatever, play some online gambling. Like it's no different. Um, but anyway, from what I'm seeing at this time, we kind of have this like upward sloping support, somewhat getting respected by traders. We have this hard line right here, but the main resistance lines, I'm still keeping my eye out, is these points at 21.9, 21.6, and yeah, so this particular resistance line downward. Um, yeah, until I see hourly candle closes below this horizontal, I mean, this slanted and this horizontal, then I can't feel too comfortable about my short position, my fake short position, okay? Fake. Fake short position. Technically, I would be in profit. I'd be up 0.28 with fees, you know, 0.7, 0.69, something like that. So, I mean, technical analysis, even though it is not as respected on the weekends, it has some onus. But this just gives me further confidence in regards to my abilities when the weekdays come in. You know what I mean? So these tests and stuff like that, like this is the reason I started this entire channel, really, was because I wanted to journal my logic in how I'm looking at the charts. And I've been doing this for 4 years now, so like I'm not like coming in with fresh eyes by no means. Like I'm coming in with some experience. So I just wanted to really kind of share and journal what I'm kind of seeing and hopefully kind of get a better grasp for myself, but also kind of share this information with others and hope that could bring some knowledge to their perspective in regards to how they perceive charts. But anywho, going off on a tangent here, so I'm going to go on the 1 hour. I don't think I've shown the 1 hour indicators here, so yeah, we still have. Ooh, I like this from a shorter's perspective. Um, Now, not financial advice. Please don't trade on the weekend. Okay. Yeah, I like this. Right now, it's having kind of like a dead cat bounce, and the TSI is showing some um, kind of confirmation in regards to the cross. So we had a cross, and then the zero line is right here. So parabolic moves happen when it either crosses up or crosses down on the zero line on the TSI. So that's something I'm keeping my eye on. We've got a sell signal here, a lower high once again, high, lower high, and a sell signal here. Okay, now the RSI has been bouncing off of the bearish control zone, but the fast moving average is below the slow moving average. The slow moving average is the white line. Fast moving average is the green line. Nowhere near the bullish control zone. Actually left the bullish control zone. So yeah, RSI cross up. EMA is at 21.6. We're not near that. Let me see here on the TMA. Now the TMA actually has confirmed the slow moving average as resistance. So when that usually happens, I mean, it's more likely than not we're going to be testing these areas as opposed to these areas at this time. So yeah, that's kind of where my mind is at regarding that. All my indicators from the 1 hour perspective are kind of saying the same thing here. So we did have this particular trend break just now on the MACD. So this particular upward sloping trend was a thing for a while, a couple of days here. Like, no, actually, no, a day and 7 hours. Now we're say bye bye to the positive sloping momentum. Anyway, from my perspective, we still have this triangle. It hasn't been invalidated, right? This particular triangle right here, we still have that. So I can't necessarily say it's completely bearish, but if this particular line gets broken and invalidated, then we're going to be looking at this particular line as the main support, like kind of like the last line of defense. And at that point, we're going to be looking at a potential breakout. Given where the momentum indicators are, and since it's already losing momentum while the money flow is green, here's another reason why I'm also bearish, is because we lost momentum on the money flow. We're losing where the peaks are getting smaller, and usually when the money flow goes from green, it goes to red, right? So that's kind of where my mind is at. But yeah, that's pretty good. I think I'm gonna leave it there. Yeah, as far as everything goes, I'm gonna see what happens. At this point, we still have a couple of, let me see. I would say maybe like another day, probably Sunday or something. We'll see a resolution at some point. But yeah, I hope this was informative, and I hope you're enjoying your weekend. Have a great rest of the night. Bye bye.